In a surprising turn of events, co-founders of Trump Media and Technology Group, the company behind the social media platform Truth Social, have decided to sell off their stock in the company. This has triggered widespread speculation about the implications of their decision, both for TMTG and its flagship platform, which was envisioned as a direct competitor to Twitter. In this video, we will explore the details of the stock sales, analyze the possible reasons behind these decisions, and discuss what it means for the future of Trump Media and Technology Group and the larger social media landscape. Trump Media and Technology Group was founded in 2021 with the mission of fighting back against big tech and providing an alternative space for free speech, particularly for those who feel they've been marginalized by mainstream platforms like Twitter, Facebook, and YouTube. The company's crown jewel, Truth Social, launched in February 2022 and was touted as a censorship-free platform that welcomed all viewpoints, especially from conservatives. At its peak, Truth Social attracted significant media attention, largely due to its association with former US President Donald Trump. Trump, who was banned from most major social media platforms following the January 6th Capitol riots, became an active user of Truth Social. The platform was positioned as a direct challenge to Twitter's dominance in the social media landscape, particularly among right-leaning users. News broke recently that some of the co-founders of TMTG have decided to sell their shares in the company. Among the notable names involved is Andy Litinsky, one of the co-founders and a former The Apprentice contestant. Litinsky was instrumental in shaping the company's vision and execution. However, reports have surfaced that he and other co-founders have sold off significant portions of their stocks. While the exact reasons for the sale have not been confirmed, several factors could have influenced the decision. Media, close-up of financial reports, business person deep in thought, financial gain. Like many startups, early investors and founders may eventually look to cash out, especially if the company's value increases. Trump Media and Technology Group, thanks to its association with a high-profile figure like Donald Trump, has seen fluctuating valuations. Some insiders may view this as an opportune moment to capitalize on their investment. Internal struggles. There have been rumors of internal disputes within the company, particularly regarding the direction of Truth Social. If true, it's possible that some co-founders may have sold their shares due to disagreements about the company's future strategy or leadership. Internal discord can often lead to key figures seeking exits. Regulatory and legal concerns. Trump Media and Technology Group has faced scrutiny from regulatory bodies, particularly concerning its proposed merger with Digital World Acquisition Corp., a special-purpose acquisition company. The merger has faced multiple delays, partly due to ongoing investigations by the Securities and Exchange Commission into potential violations of SPAC regulations. Uncertainty around these legal issues may have prompted some co-founders to reduce their exposure to the company's stock. The stock sale, a breakdown. One of the primary co-founders who sold a substantial amount of his stock is Andy Litinsky, also known as Andy Dean, a former contestant on The Apprentice and key player in the founding of TMTG. Litinsky, along with other insiders, is believed to have sold a portion of his holdings, but exact figures for the sale have been harder to pin down due to the complex nature of private company stock sales. Estimated valuation of TMTG. At its peak, Trump Media and Technology Group's valuation was projected to be as high as $1.7 billion. This valuation came from the company's proposed merger with Digital World Acquisition Corp., DWAC, a special-purpose acquisition company, SPAC. Under this arrangement, TMTG's shares were expected to gain substantial value, particularly after the company would go public following the completion of the merger. However, given the regulatory scrutiny the merger has faced, along with delays and investigations from the Securities and Exchange Commission, SEC, the company's stock valuation has experienced volatility. This uncertainty could have impacted the timing and price at which the co-founders sold their shares. Potential stock sales in the range of millions. While exact details of the co-founders' transactions have not been disclosed, it is possible to infer the magnitude of these sales based on historical trends in similar SPAC deals. Given TMTG's peak valuation and the number of shares held by insiders like Litinsky, the sale of their stock likely fetched several $1 million per co-founder. Industry insiders speculate that the stock sales may have occurred at a time when the valuation was significantly inflated, meaning that even selling a relatively small percentage of their holdings could have generated substantial financial gains. For example, Andy Litinsky and others could have sold their shares when the valuation was at its highest, around $1.7 billion. Even if they held only a fraction of the company's stock, say 1% to 5%, their stakes would have been worth between $17 million and $85 million at peak valuation. If insiders sold during more uncertain times, like when the merger faced delays, the stock may have traded at lower valuations, potentially reducing their returns, but still likely within the multi-million-dollar range. What does the stock sale signal? The decision of TMTG co-founders to sell their shares sends mixed signals about the health and future of the company. Here are some key takeaways: reduced confidence in long-term growth. One of the clearest implications of the stock sales is that the co-founders may no longer have strong confidence in TMTG's long-term growth prospects. Typically, when founders and insiders sell their stock, it can be interpreted as a signal that they believe the company has either reached its peak or that growth may slow down in the future. This could be particularly worrisome for TMTG, as the company is still relatively new and has yet to establish a stable revenue model. Truth Social's user base, while significant, has not grown at the rate initially projected. If insiders are losing faith, it could suggest that TMTG is struggling to meet its initial goals. Strategic realignment may be on the horizon. Internal changes, such as stock sales by founding members, often precede major shifts in company strategy. TMTG may be looking to pivot or refine its approach in order to better compete in the social media space. The company may need to consider whether Truth Social can effectively differentiate itself from competitors, especially with Elon Musk's acquisition of Twitter leading to changes in its content moderation policies. If Twitter begins catering to a similar audience, Truth Social could find itself in a precarious position. Potential impact on the DWAC merger. The timing of the stock sales coincides with the ongoing challenges surrounding TMTG's merger with DWAC. The merger, which would take TMTG public, has faced repeated delays due to regulatory scrutiny. While DWAC shareholders have approved extensions to finalize the deal, the process has been slow and fraught with legal questions. The stock sales by co-founders could exacerbate concerns about the merger's viability. Investors may begin to question whether TMTG will be able to go public as planned, or if regulatory hurdles will ultimately prevent the merger from happening. If the merger falls through, TMTG could face significant financial difficulties, further eroding confidence in the company. What's next for Truth Social? With co-founders selling their shares and uncertainty looming, what's next for Truth Social and Trump Media and Technology Group? Here are a few scenarios. Increased role for Donald Trump. As the face of the platform, Donald Trump's involvement in Truth Social is critical. If key insiders are leaving the company, it may lead to Trump taking on an even more prominent role in shaping the platform's future direction. However, it remains unclear whether Trump's presence alone is enough to sustain user growth and engagement on the platform. Exploration of new revenue streams. To sustain itself, TMTG will need to explore new revenue streams. Currently, Truth Social does not have a significant advertising base, and subscription models have yet to gain traction. The company could look into offering premium features or expanding its content offerings to include live streaming, podcasts, or other digital media formats. Potential sale or restructuring. If TMTG continues to face financial and regulatory challenges, there's also the possibility that the company could explore selling itself to a larger media or tech conglomerate. Alternatively, TMTG may opt to restructure internally, bringing in new leadership or investors to help guide the company through its next phase. Conclusion. The decision by Trump Media and Technology Group's co-founders to sell their stocks is a significant development that raises questions about the company's future. Whether motivated by internal strife, financial uncertainty, or regulatory hurdles, the sales indicate that not all is smooth sailing at TMTG. For now, Truth Social remains operational and continues to serve its dedicated user base. However, with competition from other platforms intensifying and regulatory scrutiny ongoing, the road ahead is far from certain. TMTG will need to adapt, innovate, and potentially make significant changes if it hopes to survive and thrive in the ever-evolving social media landscape. By keeping a close eye on the company's next moves, investors, users, and media professionals alike will be able to gauge whether Trump Media and Technology Group has the staying power it needs to succeed in the long term. Don't forget to like and share this video for more financial tips, news, and advice.